in what's been a very relatively exhausting week for everyone involved, as we welcome our audiences across our Bloomberg platforms, including our partnership with YouTube, with Stocks, Carol Masser. Now back at the lows of the day, the S&P down 6%.
Yeah, we were looking really closely to see whether or not we saw any kind of buying into the close here. But as you mentioned, Romaine, definitely taking another leg down. So we're looking at the worst week for stocks since March of 2020, back smack in the middle of COVID, in the beginning of COVID. And we've got the S&P losing something like $5.2 trillion worth of value, market value this week. So yeah, definitely one for a major, major risk off. Really coming off of course, President Trump's tariffs.
Look, not a good thing ever to talk about comparisons with the height of the sell-off during or ahead of the COVID pandemic, but we are seeing the worst day on the S&P 500 since March 16th of 2020, when that index dropped close to 12%. But we've given up our gains on the S&P 500 for going back almost a year. It's right now trading at a level that was last seen back in May of 2024.
Yeah, and let's not forget, too, it's Friday, and who knows what's going to happen over the weekend. People don't necessarily want to be long over the weekend because there could be a whole lot of pronouncements. There could be some deals announced, and you don't want to be exposed to that. Having said all that, the rally in Treasuries, the safe haven of choice, it's really lost a lot of steam here.
All right, we are getting the closing bells here in New York. I do want to point out, too, equity option volume from both stocks and indices looks like it has actually hit a record high. It'll take a little bit while for us to get the final numbers on that. But remember, yesterday was the second most active day in the equity options market on record. And it looks like today has surpassed that to overtake a record that was set back a few years ago. The Dow Jones Industrial Average that you're looking at on your screen right now, closing out the day lower by 5.5%, a drop of 2,232 points, now settling at 38,313. The S&P 500 below 5,100, a drop of more than 300 points, or 6%. You add that to the 5% from yesterday, and you can just do the easy math yourself. The Nasdaq Composite down 1,000 points, or about 6% as well, and the Russell 2000 down 83 points, or 4.4%.
Yeah, let's not forget, too, we saw credit fear gauges soaring, so a lot of nervousness in this market. We understand why. I look at the S&P 500, guys. Almost every name is lower. 489 names losing ground, only 14 gainers. And again, S&P 500 ending the week down 9.1%, biggest decline since March of 2020.
And we should just point out the S&P, deeper into that correction territory. The Nasdaq 100, it is official. It is in a bear market, down more than 20% from its all-time high score.
So it should be no surprise then that when you look at the IMAB, it is a sea of red. Every single industry group in the S&P down at least 4.5%. If I were to look at it on a 24-group basis, there is one group that did buck the declines: consumer durables and apparel. And that's tied to Vietnam, of course, because if Vietnam actually drops the tariffs against the U.S. and Trump, of course, ameliorates the situation with Vietnam, that could be good news or less bad news for companies that rely on manufacturing in that country.
Well, that's a great setup for me because Lululemon is one of those names that could certainly benefit if we see a backing off of those tariffs against Vietnam. Lululemon, your second best name in the Nasdaq 100 today, guys, up about 3%. Earlier in the session, it was up more than 6%. But still a 3% gain after losing almost 10% in yesterday's trade. So as Scarlett mentioned, those names, those companies that have large manufacturing operations over in Vietnam, including Nike, including Lululemon, soaring after the president said that he had a really good call with that country's leader. So that certainly stand out. And then I got to talk about the home builders because they also popped in today's trade. D.R. Horton among them, one of the top gainers in the S&P 500, finishing up with about a 4.5% gain here. And this is, of course, what's going on in the rates market, the U.S. rates markets. Falling rates, then you expect that to maybe make it cheaper for home buyers or folks who would like to be buying homes out there. So that was good for the home builders.
So many stocks in the red today. I just had to go with indexes. The KBW Bank Index follows banks, of course, down 6.6% today. In fact, banks had their biggest two-day drop going back to March of 2020. This after China escalated its trade war with the U.S. Capital One fell 8.2%, as did Bank of New York Mellon. J.P. Morgan Chase fell more than 8%. State Street down 8%. Goldman Sachs down 7.9%. Citigroup down 7.8%. Jason Goldberg over at Barclays reminded everyone that even though banks don't have direct exposure at the same level that other industries do to a global trade war, they have exposure to the industries that are affected by this. Of course, concerns about the economy, interest rate levels as well, also weighing on banks. Yeah.
Well, we should point out, too, though, there is some direct exposure exposure there when it comes to capital markets activity,
Yes.
Tim. You saw the IPOs that were put on pause today. Klarna, Mountain, Chime, StubHub, eToro, just to name a few. Not a single sale in the corporate debt markets today or yesterday. And then you top that off, and you talk about just the general deal-making activity. There were several deals, several M&A deals that were also put on ice for right now.
Yeah, the tightening of
And those are
financial
fees
conditions
lost.
that we've seen just in such a short period of time
Yeah.
has been pretty remarkable. Also, keep an eye on U.S. stocks or Chinese stocks that are traded here in the U.S. with the Nasdaq Golden Dragon Index down close to 9% today. This after Beijing retaliated against the tariffs with an extra 34% levy on all imports from the U.S. Shares of the Golden Dragon Index falling by close to 9% today. Still, analysts said that retaliation came sooner and stronger than expected, and it raises concerns about an escalating trade war, even at this point.
All right, let's go to the bond market, guys. Where do you go when you need safety? The bond market. But even the moves, I feel, were somewhat tame in relation to the massive sell-off that we saw within the stock market. So you got the 2-year down by about 3 basis points. You got the 10-year down by about the same. But on a weekly basis, you're just looking at 13 basis points lower for the 2-year and about 10 basis points lower for the 10-year. So it's still like a moderation of buying that we saw. Nonetheless, the 10-year around 4, dipping below 4% at one point, definitely significant. Can I honorable mention commodities for a sec?
Please.
Because we
Sure.
had a huge sell-off in the commodity market, particularly when it comes to crude. I mean, down a whopping like 6% in a day. 5 days, oil in the U.S. is down a full 10 percentage points.
It's kind of interesting, too. I mean, I was keeping an eye on flows, and some of this, of course, only really goes through Thursday. But we talk about record inflows this week into gold ETFs. Significant inflows, at least on a relative basis, almost record level inflows into European ETFs relative to U.S. ETFs here, and actually a lot of inflows into EM, and of course a lot of outflows in the U.S. And that great note out by Michael Hartnett this morning, in his words, actually telling people that maybe you short things right now as we enter a new secular bear market. Remember, in his view, it wasn't just about tariffs; it was also about the impact of Doge, and of course about the impact of DeepSeek back in January.
Yeah, to that point, just looking at flows, one-day flows, so this would be for yesterday, the Qs and Bill, which tracks short-term treasuries, saw the most inflows, but the volumes at which they saw inflows was minimal compared to about $4.5 billion coming out of SPY, which is the trader vehicle for the S&P 500.
You know, two things top of mind. We talked with our Gina Martin Adams. My concern is if the U.S., if this trade war stays around for a long time and it becomes a recession here in the United States, what happens in the U.S., it could ultimately, we're going to impact the whole world, right? If we see a global trade war, it's not going to be good for the global economy. It's something we talked about with Gina Martin Adams. The other thing is everybody says the caveat, what if President Trump changes his mind next week, in a month, or what have you? How long these tariffs last really determine what happens from here.
Well, walking it forward, though, too, have we seen capitulation, guys? When we talk about how many decliners are there versus advancing stocks within the S&P, and then that pickup in cross-asset volatility and the pickup in the VIX, are we finally clearing some positioning out, which would stabilize the equity market?
I don't know. I mean, we spoke to some folks earlier in the session today, early in our program, who said 4450 is what he expects on the S&P 500. So he sees further room to move lower.
All I can tell you is I'm ready for my pizza and wine, everybody. All
It is
right, that
Friday.
is a wrap. Have a good
Buying?
weekend. I don't know. Have you looked at your 401? I've looked at my 401k.
I will say,
I'm a little
interesting day
nervous.
for Scarlett to come back from vacation.
All right, guys, have a good and safe weekend. Be sure to check out the surveillance special on Sunday. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We will see you again, same time, same place on Monday.